one of the stocks which, though off highs, is still holding up mildly in the green is Vedanta, because the company's made some strong comments. Could potentially deliver $7.5 billion in EBITDA annually. A whole host of brokerage firms are also positive on the stock now. Nigel joins in with some details. Nigel.
Well, Mr. Anil Agarwal's Vedanta has laid its hand out and they're asking the street, will you waltz with me? You know, they've said all the right things, whether it's on the profitability, whether it's on the debt. Now, the only thing is we look forward to the dance. You know, that's important. For the time being, though, the street likes it. Let's run you through the top takeaways, though. At a group level, the EBITDA that they're talking about is they have a potential to reach around $7.5 billion annually. Most on the street are not on board with that number, but even if they get anywhere close to that number, well, the street will give it a thumbs up. How do they do that? Well, they have an expansion ongoing of the aluminium as well as zinc businesses. So that will contribute both on the expansion front as well as the cost of production. They have guided that on both these two businesses, the cost of production will come down. Debt. That's the biggest enemy for the group, right? And the street is very nervous on that front. So they've said at the parent level, that's Vedanta Resources, where there's a lot of debt that's been stacked up, which has gradually been coming down. They're talking about $3 billion of debt reduction in the next few years. How does that happen? Well, they'll look at dividend payout. The other factor that you could look at is brand fees that they're already paying that comes out from the listed entities here. And the third factor could be some internal accruals. So those are the factors with regard to Vedanta Resources. On Vedanta Limited, more importantly, they're saying there's not going to be any incremental debt. Otherwise, the fear is that the promoter entity is always saddled with debt and something's got to give, so the listed entity gets hurt. This time around, they're saying that's not going to happen. And one of the key assets that we'll be tracking for the next 2 quarters will be the sale of the steel and the iron businesses and how much money can they get from there. They were early talking about Q4 of this fiscal. Now they're talking about first quarter of FY25. So that'll be the important factor, because from there, Vedanta Limited will get money and in turn, they could reduce debt as well as pay out dividends and the promoter entity could deleverage themselves. The demerger plans as well are moving on quite well. And by the end of this year, we'll see unlocking of value is what they say. 6 listed entities is what you're going to have in terms of Vedanta. Finally, brokerages, they're quite enthused. Nuvama, they've gone ahead, they've increased their target price a little bit. They're talking about a dividend payout of 40 rupees every year. They've also increased their estimates because they're factoring in higher power sales. And CLSA, well, they have upgraded the stock from sell to underperform. They've gone ahead and increased their target price as well. So, as I said earlier, Mr. Anil Agarwal's Vedanta, they've laid up their hand for a waltz. Let's see whether or not the street is willing to do the tango with them. Back to you.
Okay, all right. The stock is at about 0.2%. Keeping Vedanta aside,